Owen, and a big turnaround on Friday for the Chinese stock market. The benchmark Shanghai Composite and a CSI 300 index finishing the day up 2%. But those gains did not make up for the steep losses. The Shanghai market tanked 10% for the week. 2 out of 5 trading days were shut down after markets hit thresholds that triggered a new circuit breaker mechanism, which regulators have now suspended. CCTV's Roy Rottenberg has more.
It was one of the worst starts of the year in decades, and the worst week since last summer's so-called Great Fall of China, when Chinese markets shed more than $4 trillion in value. This week, Chinese markets closed early, twice, after steep declines triggered newly introduced circuit breakers. The automated shutdown mechanism used by exchanges around the world was meant to prevent panic selling by China's mom-and-pop retail investors. Some suggest it may have done the exact opposite. Chinese regulators announced that after Friday they would scrap the circuit breakers for now, a relief to many investors in China and abroad.
There's been a bit of a calming as a result of removing that automatic breaker. And of course shares have just done a little bit better in China, and it's been reflected in other places as well. But what it does suggest is that there are some underlying issues in the country that need to be addressed.
Many argued China had set its trigger points too low. They still may be adjusted and reintroduced later this year. But halting their use now wasn't enough for Chinese markets to recoup their losses. The Shanghai Composite closed up 2%, but its weekly performance showed a 10% loss, effectively wiping out all of its 2015 gains. Shenzhen finished the day up around 1%, but finished the week down 14%, and still had a significant buffer from last year. And Hong Kong ended just slightly up, but had its worst weekly fall in 5 years. Some of Friday's recovery may have been thanks to China's central bank, which guided the country's currency slightly up on Friday, but only after days of controlled devaluation, which along with collapsing stocks caused global jitters over the state of China's economy.
And whatever happens now, the underlying reality is that we are looking at China growing a lot more slowly. There are some people who fear a hard landing. And if that is the case, then obviously the reverberations all across the world are going to be very significant.
A rough start to the year that began with weak figures from China's factory and service sectors. Over the weekend, China is due to release its inflation numbers, followed next week by its 2015 GDP figures. Some fear the new batch of economic data could prompt even more turbulence ahead. Roy Rottenberg, CCTV in Washington.